Get UPBOptionMillionaires.com on this Tuesday, January 26, 2016. After the closing bell on a big update for the market, you look overnight, did not look like we were going to have a strong session. We hit our lows overnight and then embarked upon a pretty miraculous rally. Held on to most of those gains into the closing bell. Apple just reported earnings. You can see S&P 500 futures really not moving around too much. If you look from a longer term perspective, you will start of the year. January has been just a terrible month. The worst start to the year for the stock market since the Industrial Revolution, and you can see the decline that started right at January 4th, and you can see we've been pulling back, but we've had just a bounce here. Is this some sort of an inverted head and shoulders pattern that's coming into play here? Or we're going to see prices rocket up to that key 1940 level that was hit numerous times throughout the lows that we saw in August, the crash lows, and the consolidation before the double bottom and the vault up to highs into the end of 2015? Or are we just setting up for a move down to much lower prices going back a couple of years? You know, crude oil's been falling to pieces, commodity complex, and you can see this possible head and shoulders topping pattern. That's going to bring us down if you draw a trend line across an S&P 500 futures to a level much lower than we are today, 15-20% from here, but just something to keep an eye on. Not a lot of people calling for that because what happens is selling begets selling, and all those analysts that were calling for new record highs are slowly lowering their forecast for the year. Perhaps we've seen a short-term bottom, something that hasn't bottomed. I think the U.S. dollar index continues to consolidate here. It looks poised to break into triple digits again, as it did last year before pulling back. I think we're going to make a molt, just like crude oil hit new 12-plus year lows. We're going to see new 12-plus year highs for the U.S. dollar index, which, guess what? It's going to continue to weigh on the commodity complex. Crude oil, I know Citigroup thinks it's the long of the year, or the century, or the millennium. I don't know. But if you can see, crude oil continues to break down. Just a really nasty decline since June of last year. And then you can go to June of 2014. That's when it really all started. And you can see this was over $100 a barrel back in June of 2014. Everybody thought it was going to go to 130, 140, 150, 160. And now there's just so much oil, they're just practically giving it away for free. You know, everybody tries to compare the price of oil now. They say, hey, the barrel actually costs more than the crude that's inside of it. Pretty crazy. But if you look, you draw a trend line across going back to the internet bubble. That trend line has been broken. I've been talking about this for many, many eons. Broken. So until we get a bounce back over that trend line, maybe up to kiss it before we continue down to lower prices. The crude oil is certainly trending lower, which is something, you know, we might have to start saying for the stock market if we continue to break down. Some of the names that have been leading the market, Amazon, look at this move we've had, closing the earnings gap that we saw back in October of last year, and you can see this flagging pattern, not looking good. Financials were bouncing a little bit today. JP Morgan Chase up against long-term trend line support that goes down to 2013. Something to keep an eye on, up 2.5% today. Is this the start of something that's going to get us back into the 60s for JP Morgan Chase? The financials need this to keep the market going. Goldman, spectacular. Look at this head and shoulders topping pattern. Broke through the neckline. You can see it just breaking down. 145, possibly 100. Do I hear 100? But we're starting to get a little bit oversold there for Goldman Sachs. Of course, stock in motion remains in motion despite its oversold status. So Goldman Sachs looks certainly weak here, down up 2.2%. A relief rally? More than likely, that's what we're getting. Same with energy. Remains in a downward trend here. Something to watch here because I think energy is going to bounce no matter what the market does in the short term as we get just relieving these oversold conditions. You can see the 50 price level that I've talked about many, many times was rejected. Look at this. We came right to, I think it's 49.93. We had a nice bounce last week, got the calls. XLE calls worked last week. They're starting to work again this week, up 4% today. You see move back up to 60 in the short term. There was something I was going to buy calls on in this market. It would be energy. Hello, energy. We can look at the NASDAQ. Also bounced off support over the key $100 level. Is this a bear flag forming here on the weekly 5-year chart? Certainly, something to keep an eye on. We break through the 100, come down to 98.50, and then ultimately here we have long-term trend line support. That's where the rubber meets the road. Brum, brum. The IWM small caps, also the $100 level is key. Look at this. Every time we've tried to break under 100, look at these wicks. Rejection. Just picture Kristaps Porzingis standing down there with his wiry arms, swatting prices higher, rejecting the lows there. So we'll see. At least in the short term, that's kind of bullish for the market. Also the VXX, I know it's a broken instrument, but over the short term has been a great indicator of where the market's headed. Down over 5% today, starting to break down. And these prices here, we'll just go over the last year. Once we start topping out here, it gets pretty nasty to the downside. You look back later last year into the summer, and early fall. You can see we hit up to 32, and we almost went 50% lower. So is that what we're going to see here from the 30 down into about the 20, 21 level here in the short term? Certainly something that is not out of the question here considering what we've seen over the last couple of years. And something else to watch here, the gold miners. Support here. The support is strong with this one. We're seeing a nice 4-day rally here for GDX, the gold miners ETF. Up to 15, not out of the question there for GDX. All right, UPBOptionMillionaires.com. A lot of earnings reports coming out this week. We had, numerous reports last week. IBM hit the key 120 level, and you can see it's bouncing here. This gap is something I'm going to look for to get filled here in the short term. Also, a stock to look going long here. Western Digital. Hello, Western Digital. You can see this long-term trend line support hit to perfection. Hello, 42. It actually broke under 42 yesterday. A nice bounce today, up 6.75%. You can see starting to reverse. There's a lot of upside potential here for Western Digital, which also means some SanDisk. Also keep an eye on this one. Big wick to the downside. Someone light that candle on fire. I'll see you in the chat room tomorrow at optionmillionaires.com. One last check at the Apple. Apple reported earnings. Yeah, the best move I made all week long was not trading it. You can see it's pretty much flat. Oh my gosh. Boring. I'll see you in the chat room at optionmillionaires.com. Everyone have a good evening. Goodbye.